Okay, today we are going to learn about the three main types of audit. Three main types of audit. To increase the knowledge about audit among the business owners, we are going to look at three major audits that are essential for organizations, companies, small businesses as well. We will discuss the three types of audit and also differentiate each of them. So today we are discussing the two types of audit, the three types of audit, and differentiate them. We are going to learn about the three types of audit and differentiate them. The first type of audit is an operational audit. Operational audit. You see, now, auditing is going beyond the just mere auditing the books of accounts. Auditing is going beyond just a mere auditing of the books of accounts. So the first type of audit we are going to look at is an operational audit. Operational audit. Then we'll look at compliance audit. Compliance audit. Then we look at financial audit. Financial audit. So these are the three types of audit we are going to look at today. Now, so let's look at operational audit. Operational audit is what is operational audit? So when we say the audit is operational, basically we are evaluating what we are evaluating. We are evaluating the efficiencies and effectiveness of any part of the company. You see, any part of the organization, like what? That is what you ask. Any part of the organization, like what? We could be looking at their production. Support a company is producing, suppose a company is producing a cap. So we want to know if they are producing a cap efficiently or effectively. What does efficiently or effectively means? So now, what I want to tell you this evening is that audit is going beyond just a mere auditing of the books of accounts. Now, audit is going beyond just a mere auditing of the book accounts. Auditors want to look at operational audit. In the production sector, what is happening there? Are the goods produced effectively and efficiently? Are machine hours used effectively? You see, how many hours does it take a machine to produce 1,000 caps? You see, so auditors they begins to look at operational level, whether things are used efficiently and effectively, so as it can give the organization value for money. All the applications at the production sector, all the application at the production sector, since Renee has joined, all the application at the production sector, are things managed efficiently? Are they managed effectively? This is what audit is looking at. So audit is going beyond just a mere auditing the book of financial statement. So now auditors are looking at auditing operation of organizations. In general term, we said efficiently and effectively means operating at a lower cost and without sacrificing qualities. So you are really efficient. So we can see you are really efficient doing what you are supposed to do with at least amount of resources. This could be an operational audit now. Now bear in mind, we said all things the production department, all things at the production department. This means accounting. We are not really auditing the books of accounting information only, as I have explained. Now, for example, look at the payroll and auditing your payroll department and see how well they are running the payroll department. We can also audit the payroll department. Now, bear in mind that an operational audit is very, very subjective. Why? Because there are no established criteria, but it's established criteria like the general accepted accounting principles. It is an established criteria. The Internal Revenue Code is an established criteria. It means that sometimes that you can't compute your resource to an operation audit. It is very subjective. There are no established criteria. So basically, what I want to say is that accounting is going beyond just a mere auditing of the financial records. Now, production activities are being audited to see whether machines are used efficiently, machines are used effectively, and at what a least cost, how resources are applied to produce a number of goods, how resources are applied to come out with 1,000 units of product. That is what audit begins to look at. And that is what we term as an operational audit. Then from operational audit, we come to compliance audit. Compliance audit. So definitely you see that operational audit is different from financial statement audit. Now, compliance audit, certain procedures, rules. Are they compliant in certain procedures, rules, and regulations? Are they following a certain procedures, rules, and regulation set by outside or the higher authority? What could be the examples of compliance audit? So compliance audit look at all, wherever you find yourself as an organizations. We have standards, regulations that the organizations need to abide with. When we come to Ghana, if you're an organization that you're operating, you have to pay SNITs, you have to pay second tier, you have to pay IRS. Now, this kind of audit ensures that you are complying with all internal and external regulations. Compliance audit ensure you are abiding with internal and external regulations of the organizations. All the regulations, bylaws, standards, when it comes to accounting, we have the IFRS, we have the GAAP, we have the principles, we have the standard that you have to obey it before you come out with an accounting information. Now, auditor ensures that you are in compliance with all these rules and regulations that is set both internal and external for the organizations to obey it or to abide with, auditor ensures that your organization is following all these rules and regulations. And that is what we term as compliance audit. Whatever rule, whatever criteria, whatever procedure that is set up for the organization to follow, they are following everything. So compliance audit ensures that the organizations is compliant with all these rules and regulations. These are compliance audit. They receive tax money, therefore, the government want to make sure that the schools district spend their money wisely. What they do, that they receive a lot of money from outside parties, government, state organization, local government, and even private donors. And what they do, the third parties giving the money. So all this, if monies you receive from this place, compliance audit want to be ensured that you are applying the money judiciously according to what you said you want to use them for. For example, IRS audit, it is basically a compliance audit. They are really following the IRS rules so this is what determine whether a bank requirement for a long continuations has been met. Please, are you following? Hello? Hello?
Hello, sir.
Yeah, sir, we are following.
Hello, sir.
You are following?
Yes, sir.
So who can explain what I have said? It is operational audit. What is an operational audit? Who can help me? I have done an explanation for you. So who can help me to understand what is an operational audit?
Sir, please, you said the operational audit is an auditing where the auditor audits all the parts of the company daily operation activities.
Once again, I want to hear you well.
Oh, okay. So the operational audit is an auditing where the auditor audits all the parts of a company or an organization. All the parts, meaning the sub parts of the company. The auditor audits all those parts.
Okay.
In other words, it audits the production.
Okay.
Yeah.
So what is compliance audit?
Simply said, the compliance audit is where the auditor makes sure that all the tools or all the things he or she is using for the auditing is backed by law.
Please, who is speaking?
Please, this Manasseh.
Manasseh. Manasseh, yes, who never come to my class. Okay.
Yes, sir.
Okay. So that is the second type of audit. That is the second type of audit. So financial statement audit. Here we collect enough evidence, sufficient evidence to do what? To render opinion about the financial statement. If the financial statements are in compliance with criteria, the criteria are either GAPs or IRS. It doesn't have to be a GAP or IRS. The criteria could be any criteria. The financial statement audit shows the financial health of the organization. It is very, very important to find errors based on the criteria. During creating financial reports, auditors have to accept the accounting principles, that the gaps according to their country. The main purpose of financial audit report is to determine the financial health and how the business runs. Also, also performed the main role in decision making. You know, as we said, financial informations are needed for decision making. And for the organization to show the strength or the financial health of the organization to general public, at any point in time, these financial records need to be audited by an independent person to express opinion on the financial report or the financial statement as to whether the financial statement shows true and fair view to the parties to the organizations. When I say parties, what do I mean? When I say parties, what do I mean? Parties to the organizations. Hello?
When you say a part,
Parties to the organization. I told you.
those are the stakeholders, please.
The stakeholders who have interested in the organization, who want to make use of the financial statement. Auditing of the financial statement gave them assurance that the financial statement show the financial health of the organization. So, financial statement audit is an independent examination of the financial records and the financial report to ensure that the financial statement shows true and fair view of the state of affairs of the organization. And so stakeholders need this financial statement to help them make so many decisions. All parties to the financial statement, by getting assurance from the auditor, it helps them to make so many decisions. We've examined the company records and established criteria as loan requirement provision based on the loan requirement, determining that they are violating, ensure that they are not violating any rules. What available evidence financial statements are calculated by the auditor. So these are the three types of audit that we have. These are the three types of audit, three main types of audit. We have the operational auditing, we have the compliance auditing, and we have the financial statement auditing. Now, today I want us to continue by looking at identifying the primary audit. How do we identify the primary audit? Yeah, the topic is identifying the primary audit. What is primary audit? The audit of the primary company, that is the holding company, when consolidated financial statements are being prepared. The primary auditor is responsible for audit opinion on the group's financial statement. Primary auditor in the dictionary of accounting subjects, social science, business, and management. What are the two primary types of audit tests? Now, so identifying, when we say consolidated account, who understand it? Consolidated account. When we say consolidated account, who understand what is consolidated account? Abudu.
Okay.
Abudu, what is consolidated account? Abudu, what is consolidated account? Abudu. Abudu. What is consolidated account?
Sir, please.
Who can help? Who can help?
Can I
Yes,
try
try.
it? Okay,
Usually, the
some
accounts which
comp
were multiplied individuals' accounts or financial entities.
I can't hear you. I can't hear you. Okay, in simple put, consolidated when the organization exists with its subsidiaries. When an organization exists with its subsidiary, that organization is expected to prepare one account with the main company and its subsidiary. Even though they will prepare different accounts, they have to join them together to be one account. And that is what we term as consolidated account. An account prepared by organization and its subsidiary to have one account. That account is termed as consolidated account. Abudu is moving up and down. You come and go, you come and go. That is termed as consolidated account. Now, when those companies are joined together, an auditor moves in to audit and certify the accounts. And that is what we term as identifying primary accounts. Now, there are two methods of primary. There are two primary types of auditing tests. There are two of the primary types of auditing tests. The following are 5 types of auditing method used during auditing. Now let's look at these 5 methods that we use during auditing. These 5 methods that we use. One, during auditing, we send information to the clients as the audit is going on. We use something like audit inquiry. 1, audit inquiry. 2, audit observation. 3, audit examination and inspection of evidence. Then 3, pre-performance. Then 4, pre-performance. Then 5, computer-assisted audit techniques. Computer-assisted audit techniques. No. Okay. So these are observations. These are type of testing that we have. Method used in auditing testing. We have audit inquiry, audit observation, examination and inspections of evidence, re-performance, and computer-assisted audit techniques. Now, let's come back. What is the primary focus of audit? In auditing, what is the primary? The objective of an auditor is to form an independent opinion on the financial statement of an entity. The prime focus of an auditor. What is the prime focus of an auditor? The objective of an auditor is to form an independent opinion on the financial statement of the audited entity. The opinion includes whether the financial statement show a true and fair view and have been properly prepared in accordance with accounting standard. These are the opinion. The main objective of an audit is to form an independent opinion on the financial statement of audited entity. The opinion includes whether the financial statement shows a true and fair view and have been prepared in accordance with the accounting standard. Okay. What are the difference of audit? What is an audit? There are three main types of audit. We have external audit, we have internal audit, and IRS audit. External audits are commonly performed by certified public accounting firms and results in an auditor's opinion, which included in audit report. Now, there are different types of audit which we have studied. Internal audit are conducted by a person or team within an organization, teams employed in the same organization. And their aim is to ensure that the policies and procedures that the organization accepted to work with, they are adhering with. Internal auditors are also employees of the organization, and their purpose is that they should ensure that the policies and regulations that the organization accepted to work with, they are adhering to it. External auditor, it is an external entity or a group of qualified entities that audit organizations. They are external. They are not within the organization, but they audit entities and express their independent opinion as to whether the financial statement and its records are prepared in accordance with the standard and they show a true and fair view. External auditors are a group of qualified persons that work for organizations. That is external auditors. We have task auditors. In organization, at a particular interval, IRS will send its auditors to come and audit your organization whether your dealings with tax issues are accurate. Then we have financial auditors. As I've said, we have operation auditors. We have compliance auditors. We have information system auditors. Then we have payroll auditors. So we have so many types of auditors. Some are external, some are internal. That is what you have to know. Now, what is the prime purpose of an audit procedure? Audit provide impartial opinion and assessment of company records, processes, and procedure. Interested parties such as shareholders, possible invest and lend who might be interested in investing in a company review its audit statement. So stakeholders who are interested in investing in companies already reads financial audited report of organization, and that helps them to do investment in various organizations because the auditor's opinion show true and fair view of the state of affairs of the organization. We said audit provide impartial opinion assessments of the company records and interested parties such as okay. Now, what are the types of quality audit? The American Society of Qualified identify 3 types of audit: a process audit, a product audit, and a system audit. A process audit verifies the company process meets the requirement for a particular standard for which the organization is seeking certification. That is a process audit. The most common type of audit, financial audit, is one of the most common types of audit. Most types of audits are external. During a financial audit, the auditor analyzes the fairness and accuracy of the financial accounts statement. Auditor review transaction procedures and balances to conduct the financial audit. Which is the best description of final audit? It is the type of audit also known as periodic audit or complete audit or balance sheet audit. A final audit is that which starts after the closing of the accounting period of the business and it's carried out till completion. That is final audit. Now, the agreed upon procedure is the type of negative engagement where the auditor perform their reviews on the procedure that they agree with the clients. This type of engagement is called limited assurance. As a brief recap, an audit examines your financial statement, transactions, and records and transactions to verify they are accurate. Typically, auditors look at financial statement and accounting books to compare information. You or your employees may conduct audit. So typically, these are what I want you to know over there. Identifying audits. Identify audit. Any question? Any questions? Hello? Hello?
Hello, sir.
Any question so far?
Please, no question for now.
No question for now. Okay. So let's look at audit integrity, independency, and objectivity. Audit integrity, independency, and objectivity. Auditing credibility is a process where you check whether the information provided by a source is reliable. This includes checking if the person provided the information has the necessary skills and training to provide accurate information. 1, we have integrity. 2, fair presentation, due professional care, confidentiality. These are a professional ethics an auditor should exhibit as an auditor. If you are an auditor, you are expected to be to have integrity, to have a fair presentation, due professional care, your confidentiality, your independency, evidence-based approach, and risk-based approach. You are expected of all this. So these are professional ethics an auditor is supposed to exhibit. These are professional ethics. Now, ensuring the auditor maintain their own credibility start with professional values like honesty, integrity, objectivity, and impartial. Let us understand each of these 7 principles in more detail. It is important to understand what each principle means and how it can be applied. So 1, as an auditor, integrity. The first principle of audit credibility, that is the auditor credibility, is that it should be based on integrity. The term integrity refers to honesty, fairness, and truthfulness in all aspects of auditing process. It also means being free from bias or prejudice. Integrity is one of the most important principles of auditing because it ensures that the quality of the audit report. Auditors must have the ability to be objective, to objectively evaluate data they have collected. They must also allow their personal opinion they must not allow their personal opinion to influence their findings. Moreover, auditors should not accept anything from a company being audited as a gift. Gifts are considered to be compromising the integrity of auditors. Even the perception of integrity compromise can affect the audit credibility. So, because of this, integrity is very important. During the auditing, you shouldn't be compromising. You shouldn't be found receiving gifts from the auditor. These things are very, very important. Integrity. Then we come to fair presentation. These principles state that the information presented during the audit is fair and unbiased. When conducting audit, auditors are required to present the facts and figures. They may not make any assumption about the company, does or how it operates. The auditor must have the ability to objectively evaluate the facts and circumstances presented in order to make a sound judgment. So the auditor shouldn't use assumption. There must be fair presentation. You should have the ability to evaluate the facts and circumstances of records put before you. If the auditor do not have their findings on facts, then the results will be biased. So you should present your everything on fact, records, and data collected. It shouldn't be based on assumption. That is fair presentation. So as the opinion or findings that you give must be based on facts and evidence. Due professional care. Due professional care. These principles state that auditor must use their professional care when performing audit. This means that the auditor must conduct themselves professionally at all times. They must treat people with respect and dignity. They must follow procedures for collection evidence. Every evidence needed to support their audit, they must follow procedure. And they must write report that are objective and factual correct. That is professional care. Confidentiality. Confidentiality. Confidentiality is the four principles of audit credibility. When auditors perform audit, they often gather information from many sources. Auditor must keep confidential information secret. As an auditor, you don't go to a company and audit them and start spreading information that you found. Auditors doesn't, whatever you found with the clients while doing the audit must be kept confidentially because it is somebody's organization's information. It is somebody's organization information, and therefore information must be kept confidentially. Auditor must protect the confidentiality of their clients' business secrets. They must also protect their own work product. They must protect their own work product. Only those who need access to those information should be allowed. So you don't go publishing the information that you have derived from the client system. It is only those who need the information that you must allow them to have access to. Only those who need the information are the only people you must allow them to have access to the information. Then independency. Independency refers to the lack of relationship between the auditor and the entity under review. Independency refers to the lack of relationship between the auditor and the entity under review. In other words, it must refer to auditors impartial towards the auditee. Independent audit assess the activities in question without allowing those activities to affect his or her judgment. You see, as an auditor, you must be on your own. Independence means lack of relationship. You shouldn't build any relationship with the clients that can prevent you from forming your opinion when you finish or you are writing your report. So it is lack of a relationship. Don't build any relationship that might prevent you from forming your opinion. You must be on your own when they said independency, without any influence. That is independency. An auditor must have independency. An auditor is considered independent if his or her has no conflict of interest. If he or she has no conflict of interest. Anything that will influence your opinion, your objectivity. If an auditor cannot be completely independent, then the audit report should include notes explaining how the auditor was unable to be totally independent. So as an auditor, independence is number one. If small firm, it must not be possible to have independent auditors for each internal audit. Yes, small firm, it is difficult to have independence of the auditor. In this case, the organization should make all effort to ensure that auditor is unbiased. Then we look at evidence-based approach. Evidence-based approach. The evidence-based approach is the 6 principles of audit credibility. Auditor must collect sufficient evidence before making conclusion. Since audit have limited time to complete, it might not be possible to look at each and every piece of information. In such situation, auditor should depend on sampling. Sampling involves looking at subset of records, document, or accounts. The selection process should be random so that the sampling represents a whole population. The auditor should keep records of specific sampling review during the audit so that these are verifiable. You know, two people left. Evidence-based approach. As an auditor, you need to have enough evidence before you conclude, you make conclusion on the work you are auditing. That is what we term as evidence-based. But in do that, in auditing, you can't check every information that are put before you. So sometimes we use something termed as sampling. You have to do sampling of the work. Come with your own sample that will help you to cover the entire population of the work that you are doing. You see, if you're able to do a work sampling and pick them randomly, you will be able to have enough evidence to cover any conclusion you want to draw on the audit that is before you. You see, on the audit that is very, very important, because you cannot, most of the time in auditing, we have limited time. We have limited time. So you cannot cover every area. You cannot cover every area. Evidence-based approach. Then we have risk-based approach. We have risk-based approach. Risk-based approach is the 7 principles of audit credibility, which state that auditor should focus on areas where there is higher risk. When you are auditing, in preparation of audit, our audit plans, which we shall study ahead, you have to do audit sampling. You have to do audit sampling and risk assessment. And the risk assessment will help you to notice a very high risk areas in the organizations that you are auditing. Auditor must identify and consider risks before starting the audit project, even at the planning stage. This way, the auditor can focus on the areas that are significant and important for the audit objective. So when you are able to assess the risks, it will help you to focus more on the risk area than the less risk area. So evidence approach and risk-based approach are very important in auditing, and it helps us form a good opinion. It help us form a very good opinion. Hello? Hello?
Hello, sir.
Yes, I'm talking alone. Any questions? Any question? So, Manasi, help me to explain what independency is as we study. Manasi, help me to explain what independence is. And Antonio,
Okay.
to explain what is integrity. Then Abudu helped me to explain what is confidentiality. Yes, I'm listening.
All right, sir. So the independency in this case is when the auditor must free himself from any other thing that would distract his auditing in a way that he should do his auditing independently without being influenced by any member from the organization.
Okay, I'll accept it. I'll accept it. Yes, then Antonio, what is yours?
Comes to integrity.
Antonio.
Mine is
Hey.
please, mine is integrity.
Yeah, so explain what is integrity.
Yes. So when it comes to integrity, some must be honest, and then truthfully know aspects of his work.
Mm-hmm.
The audit data must be honest, and then he should
Antonio, I'm not hearing you at all.
the auditor must be honest.
It must be honest. Okay, I'll take it. Yes, Abudu. Is Abudu there? He left just now. Abudu is moving up and down. Okay, so these are the ethics in audit. The importance of ethical conduct for audit professionals. Let's look at the importance of audit the importance of ethical conduct for audit professionals. Then we shall end today's. Audit code of ethics are pretty important. They may provide the foundations of rules and the expectation that ICA, CPA, and other organizations in general must follow during an auditing. The Code of Ethics sets minimum criteria for audits conduct and what the organization hiring them should expect in terms of behavior. Internal audit is an impartial, independent assurance and consulting activities that add value and improve companies' operation. By implementing a systematic disciplinary, the professional approach, organizations can quickly achieve their goal and improve efficiency. Integrity in all professions and corporate dealings. A professional accountant should be forthright and honest while making all decisions and observations without any bias. Objectivity. Conflict of interest or undue influence of others should not be allowed to trump professional or business decision by a professional accountant. Professional competencies and due care. Professional accountants should have ongoing duty to keep their professional knowledge and expertise up to date to ensure that competence professional service to their customers and employers on current practice, legislations, and procedure. Here, professional competence, what it's saying is that as an auditor or an accountant, you should always update yourself, even whether when you are chartered. If you don't update yourself, even as a chartered accountant, and you don't update yourself, if you don't take a time will come, you will become like a class 1 person. So as a professional accountant or auditor, you have to always updating yourself by reading journals of the profession that you find yourself. You have to attend conferences to be updating yourself. And by so doing, it will raise your professional competency and expertise on the profession you find yourself. And you will be able to serve clients well. You have to always be studying as an accountant, as a professional, as an auditor. Confidentiality, a professional accountant should maintain the confidentiality of information obtained, professional and business connection, and not divulge such information to the third parties without sufficient and express authorization. This is only an exception in breaching a client's confidentiality. In breaching a client's confidentiality, which is legally binded. A professional accountant should never use or sell confidential information obtaining through professional and business interaction for the benefit of outside parties or personal gain. That is confidentiality. Then we have professionalism in behavior. A certified accountant should follow all standard operating procedure and applicable laws. Thus, avoid any action that brings profession into disrepute. Now, the code of ethics is critical during auditing process not following the code of ethics may lead to several threats that might affect the professionalism. So the code of ethics are very, very important. The IFAC code of ethics ensure that an assurance firm's integrity, objectivity, and independency are invaluable to corruption. The business must have measures in place to protect itself. Here are some threats that may or may not impact the audit process. So we have threats. They are all self-threats. Let's look at this. Self-threats. A self-threat is when the auditor in question is in capability benefiting from the firm profit under the company's is in any way associated with the company business operation. Self-threat. Self-threat means that the company in question, when the auditor has any association with the company in question, is a self-threat. And last, I told you in class that that auditor should exempt himself from the work, especially when you are going to audit, let's example, a branch, and that branch manager happy to be your friend, you have a self-threat. There are a lot of things that will influence your independence, and therefore such a job, you need to hand it over to somebody to handle. Self-threat review. A self-review threat arises when the auditor reviews his report. An individual auditor auditing their work always creates chance of self-review threat, as the auditor may get biased on examining his work and struggle to represent transparent information. Self-threat review. Self-threat review. Self-threat review. Now, advocacy threat. Advocacy dangers occur when a firm, a member of assurance team, or a member of the network firm, as the case may be, promote or is perceived to promote an assurance point of view or opinion to the extent of prejudicing the objectivity. Advocacy threat. I'm taking it again. Advocacy threat. Advocacy threat. Advocacy danger occur when a firm, a member of assurance team, or a member of the network firm, as the case may be, promote or is perceived to promote an assurance client viewpoint or opinion to the extent of prejudicing the objectivity. When in an act of promoting, you end up prejudicing, is advocacy threat. Familiarity threat. Familiarity threat. A familiarity threat occurs when a firm or the audit team member is in contact or has good relationship with the client. Because of this relationship, the auditor unable to give unbiased report. Familiarity threat. Intimidation threat. the intimidation threat. When an assurance team member feel threats, or whether real or imagination, by the directors, officers, or employees of the assurance grant, it often prevents them from operating of anything, intimidation threat. As you do the work, anything at the grant side that will prevent you from doing the work is what? Intimidation threat. Anything that they will do that will prevent you from doing your work right is intimidation threat. How to prevent threats? Let's look at them. Then we shall end today's. How to prevent threats. It is essential to prevent these threats to maintain professionalism. Auditors are requested to take these measures to avoid the above threat. The auditor should maintain their independence. 1, the auditor should maintain their independence from the grants company. 2, when there are no adequate protection to decrease stress to an accepted level, the only option are to stop the activities or the threats or the interest causing the threat, or decline to accept or continue the assurance engagement. That you should discontinue the work. Then 3, auditor must continually evaluate what is in the public interest. You must evaluate what is the problem when considering threats to independence, and possibly remedy or to reduce or eliminate these vulnerabilities. Therefore, it is also worth noting that implementing some of these protections may not address apparent independence. Thank you. Any question? Thank you.
Please, can you go over it once more for me?
Pardon me?
Can you go over it once more for me?
Who is speaking? Who is
please,
speaking?
Abdul.
Abdul, you have never sat in the class. You were moving up and down.
Please, my network was a little bit down, so I texted you that my network was having a problem.
Our next meeting, we shall treat audit strategies and plans. Audit strategies and audit plans.
Okay, sir.
So which area do you want me to go over? Tell me.
Please, the last part.
The last part.
The one, yes, the one just.
How to prevent threats.
Yes, sir.
Is that what you want?
Yes, sir.
Okay. It is essential. You see, we said we have some threats that as you move and perform the audit, you are likely to encounter what we term as self-interest threat. 1, this is a threat that you have to battle, self-interest threat. It means if the business that you are doing, you yourself have some interest in it, you encounter self-interest threat. Then self-review threat. You see, a self-review threat arises when the auditor reviews its report. You see, as an auditor, you are not to review your own report. An individual audit their work always creates a chance of reviewing threat, as auditor may not be biased or examine its work and struggle to present a transparent. When you are reviewing your own work, the purpose of audit, you should do it and send it to your topmost senior at the office to review your audit work. But if you do the audit and you are reviewing your own work, you are likely to be biased That is what we are saying. So you don't have to review your own work. That is self-review trait. Then we have self-interest. Then we have advocacy trait. Advocacy danger occurs when a firm or a member of assurance team or a member of the network, or as the case may be, promote or is perceived to promote an assurance viewpoint or opinion to extend a prejudicing objective. Yeah, advocacy, when a member of the assurance team is promoting opinion that what jeopardize the objectivity, you see, it's very, very dangerous. That is what we call advocacy trait. Then we have familiarity trait. This one, I said it in class. When you are familiar with the person you are auditing, it causes a lot of, maybe you have relationship with the person. It gives unbiased, help you to give unbiased report. And I said that when it is so, that type of work, you shouldn't do it. You should transfer to somebody. Then intimidation trait. When in the act of your performing the audit, the organization that you're forming yourself are doing a lot of things to intimidate you. That is where you find the intimidation trait. You see, when they are intimidating you, it also makes the work very, very, very difficult. Even they are not trying to cooperate with you. You are going through a lot of this from the client viewpoint, intimidation trait. Yeah, you are likely to come by intimidation trait. How to prevent this trait? As I've said, how to prevent this trait? It is essential to prevent this stress. Maintain professionalism. Auditors are requested to take these measures to avoid the threat. 1, the auditor should maintain their independence from the client's company. Maintain your independence. Don't let anything from them influence you. If you maintain your independence, you'll be able to overcome some of these threats. 2, when there is no adequate protection to decrease this threat to an acceptable level, only option is to stop the activities or interest causing the threat, or decline to accept continuing the engagement. When it continues and there is no inadequacy to reduce, what you have to do is you can discontinue the work, stop the work. Auditor must continue evaluating the public interest when considering threat to independence and possibly remedy to reduce them. So when you are confronting with some of the threats, your interest should be having public interest. Stakeholders that have interest in the work, that should be your interest. And that can boost some of the vulnerabilities, like independency threat. It can put them, reduce them, or eliminate these vulnerabilities entirely. You see, it is also worth noting that implementing some of this protection may also address apparent independence. So all boil to independence. Make sure you don't gain any interest in anything. You don't let anything influence you. You should let public interest and your independence works. This can this threat are threat that you auditor, when you visit somebody, you are like to face some of this information that I'm giving you, things that you are like to face on the field. And these are some of the ways you can reduce some of the things that you are likely to face on the field. Please, are you okay? Are you okay now? Are you okay now? Are you okay now? Hello? Hello?
No, sir. Please.
Antonio, are you okay?
Yeah, okay, sir. Yes, sir.
Yeah. So this is going to end our this thing. Next week, when we meet Friday, for the sake of your colleagues, I will let us to have Monday. We shall do, possibly I'll confirm to you Thursday, for you Thursday, so that Monday we meet for the stage, strategies and the audit plans. We do it here so that your colleagues can also benefit. Please, are you okay?
Okay, sir.
Hello? Hello? So
Yes,
next week,
yes, sir.
Monday, we are meeting here. Hello?
Okay, sir.
All right, sir.
Manasseh, so that you also benefit.
All right.
Yeah. So we are not meeting Friday, we'll meet Monday again. Abudu,
All right, sir.
is Abudu there? He's not speaking. So we are meeting Fridays next week, Monday, sir, to continue.
Okay, sir. All
Uh-huh.
right, sir.
Because from the next subject to some things I'll be bringing to the exam.
Okay, sir.
Uh-huh. So let's do some 2 online or 3 online before we continue. So next Friday too, we are not meeting.
Okay, sir.
We shall do it online.
Yes, sir.
Okay. So all the best.
All right. Thank you very much, sir. Thank you. We are so grateful.
Thank you for coming.